Morning, everyone, and welcome to the On Time On Target morning brief. We're coming at you live this morning from the Wynn Resort and Casino here in Las Vegas. And I'm sporting my Las Vegas Raiders hat to fit in with the local crew here. But if you ever walk into the Wynn, right by the entryway, there's this beautiful carousel that's behind me. Kind of a famous space, so I wanted to show that to you today. And also, I'm walking down a kind of into foyer of lights as we go through here and talk about today's show. Today we're going to talk about the index fund called iPay, which is an index fund for payment processing. So when you think of individual best of breed names, you're thinking Square, PayPal, but if you want to own like all the names in the space, even the ones you haven't heard of, then iPay is the way to do it. With that, let's go ahead and get the show started. All right, good morning, everyone, and welcome from Las Vegas. Hope you enjoyed that intro there. We are going to invest with Fighter Pilot Precision on every day like we do all the time. Make sure you have your call sign set up in the chat room and the Q&A window set up appropriately with all attendees selected. And remember, this is for the disclaimer, this is a financial education presentation. You have to do your own due diligence before you act upon anything you hear in this presentation. And with that, let's go ahead and get started with the overview. Our mission objectives for today, December 15th, we're going to grow our money, protect our money, and live off our money. Specifically, we're looking at payment processing today, which when you think of payment processing, you think of the kind of the old school Visa and MasterCard or the originals, Amex, that sort of thing. Now we have Square, PayPal out there, and we also have an index fund called iPay, which you heard me talk about in the intro. So that's what we're going to talk about today. So pretty excited to get into that stuff, and you know that parlays a little bit on the Bitcoin theme that we've had out there as well. Okay. Our question of the day is about yield on cost. You'll hear this term thrown around, so we're going to really get into that. You know, what is dividend yield versus dividend yield on cost, and how this is kind of a nonsensical term. So if somebody's throwing that around, I think you should not include that in your financial vocabulary at all. But we can get into specifically what that means here in a little bit. All right, our flow for today, we're going to be long, short, open, short, long. We're going to go through the market review. Obviously, you know, or you probably know that the futures are in the green pretty big. There is hope of stimulus out there. And of course, the vaccine rolled out yesterday, you know, small amounts, but at least it seems like the plan we have going forward is pretty strong. We'll go through some headlines. We're going to look at our long-term investments, which we already talked about there in the payment processing space. And then we'll get down into our short-term trades. I posted in the chat room, I only have really one long for today and only really one short. There's a lot of things that are kind of melting higher, but because the futures are up, but not a whole lot in motion out there. So we'll take a look at those two, and we'll see if we can get a trade today. We'll execute the market open. We'll transition to the Q&A. Remember to populate the Q&A with your questions, and I'll answer this first, and then I'll end up with the question of the day. If you have any contingencies out there, contact me at steve@ototnow.com. All right, over to the market. There we go. Over to the headline review out there. You can see that the futures are in the green. We'll go ahead and refresh those. So yeah, almost a green, almost a percent in the green for S&P and the NASDAQ, and Dow's up about 0.5%. Buffett's out talking this morning about stimulus, so I think that's going to help the markets pretty significantly out there because he's obviously the respected name in investing. When we take a look around the world, over in Europe, things are mixed, not a whole lot going on. Asian kind of down across the board, but not tremendously down, so no big deal there. As far as here's our numbers from yesterday. If you remember yesterday, we started off pretty in the green, right? Even more so than we are today. They kind of sold off through the day. So we'll take a look at that chart and what that means for the numbers today. All right, in the bond market, not a whole lot going on. Oil pretty stable at 47. We like that. Gold and silver creeping higher there, 1% and 2% respectively. And then over in Bitcoin land, we're at 19.4. So again, getting closer to that magic kind of ceiling of, or resistance level, I should probably say more appropriately, of 20,000. So we'll keep an eye on that. And again, if a derivative Bitcoin play is the Square and PayPal, because now they allow that as well. Okay, so taking a look at the headlines out there, let's talk the stimulus first. That's what's going to move the markets today. Excuse me. That's what'll move the markets. Is he's calling for more stimulus. There should be a package out there. I think it's 890 billion. It's just shy of the 1 trillion mark. We'll see if that number's actually on here. Again, fairly targeted at small business, and that's really who needs it. That, and I haven't heard people talk about schools, but there's several folks that are really still on the edge of barely hanging in there. Just from the street check of walking around Las Vegas, is a lot of things aren't open. So the big casinos are open and the big stores are open, but even when you walk through a malls, or a casino, half the restaurants are still closed. So, so there is an effect out there that we just can't ignore. So stimulus checks are not included in that. There's some folks pushing for that, but I don't think that's going to happen. So don't expect a Christmas present in the mail from the US government in terms of cash. All right, let's see. Moderna's vaccine is on the heels of the Pfizer vaccine, so that is good. All right. Anytime you see a pandemic, Ponzi schemes and stuff cropping up, I get emails every day about how somebody wants to wire me £4 million from England because they don't have a beneficiary. Just delete all that stuff. That is just complete and utter nonsense. All right. We had the Electoral College vote last night, so officially Biden is the winner. I don't know. I would kind of expect Trump to concede at this point, but maybe just that's not going to happen. Maybe we're past that. Okay, about Barr resigning. You saw that in the mainstream media news. All right. Ford, the Mach-E Mustang is coming out, the electric Mustang. So that's, I definitely want to at least put eyes on that. I have no interest in buying such a thing because that's a muscle car and it should have an engine, in my opinion. But I certainly do want to see it. And hopefully they make it kind of cool, at least to keep the Mustang line going and well respected. Here you go. There's the millennials. This is kind of related to our topic of the day of payment processing. Using mobile banking apps. Honestly, you can take all of your online. I'm at the USA and have been for years, but there's no branches anywhere near me. So I've always done everything online. And now I have a portion of my funds in USA. Almost everything else is in Schwab, including, checks and debit card and all that stuff out of the taxable account. So I don't know. I really don't see the need to walk into a brick and mortar bank anytime soon because you can get everything done online. Okay, that's it for the headline review. Let's go ahead and take a look at this iPay. So payment processing, when you think of this, I was not against, but I wasn't in support of Square and PayPal because I was like, okay, this is a basic commodity, right? So if Visa and MasterCard charge 2.9% fees on every purchase you make, why wouldn't somebody out there charge 2.8 and then subsequently 2.7 and then so on, all the way down to below 1%? I still can't really explain why that hasn't happened. Nobody has come in and said, let's do this in the ultimate discount. It happened in the brokerage world. You have your discount brokerages. So I kind of don't know. I understand the need for obviously continued payment processing, and I'm sure it costs something. You can't do it for free, but I'm kind of shocked that it's been pretty sticky at keeping it that 2% plus, if you will. I do have a friend that's a small business owner that maybe he's not small, but certainly owns a business in this space. And listening to him talk, it seems like there's room to undercut the big guys out there, but it hasn't happened. But when you look at a fund, I talk about funds like iPay, and let's just look at their holdings, and we'll come back to this chart. Here's the ETF.com that I talked about yesterday /iPay. When you want to look at holdings, so I'm looking in here. If you can see my arrow, I'm circling the middle part there. So you have Square, Fiserv, PayPal, Amex. Not familiar with Aiden or Adian, or however that's pronounced there on the fifth holding. You know, Visa, Fidelity, MasterCard, Global Payments, you know, all of those are kind of names you've heard of. And when you look at the chart on the left-hand side, you can see that all 10 of those names make up, you know, 54%. You can either see it in the chart at a quick glance, or you can look at that number, top 10 weighting. So I like ETFs that are focused, right? Because that's how I invest in individual stocks. So I want to focus as much as possible. It's not that diversification is bad, but you're certainly not going to achieve alpha if you simply diversify across the entire space. But what you get with an iPay here is you have your big 10. I could argue maybe there's a big 6 in there, but these guys know this space because they're the experts. So they're saying, okay, top 10 is 54%. Well, all the other little names that are out there make up that other 46%. So that's the advantage of going into an ETF sometimes, is if the big names have run up, like you can't really buy Square and PayPal here because they've gone through the roof. But all the little ones haven't. So there's a lot of room for them to catch up. So when we take a look back here now at, you know, here's your iPay, and this looks like a beautiful chart. When you look at it, it's really, it was down at 32, up at 63. So it's kind of doubled, which is good. Not saying a double is bad, but when you look at some of the other names, you know, like Square, you know, it's just eye-watering. This was at 40, and now it's at 220. So I don't know, 500%. You do the math to try to figure out the gain there. But yeah, that is wow, right? So can you really buy into something that's up 500% since March? That's pretty tough to stab into, right? So that's why you know, if you want to get in this business or believe in that theme, you're not getting into business, but if you want to get in the ownership of this theme, the iPay is kind of the better way to go. Looking at PayPal, that chart pop up, not quite as amazing as Square, but certainly below 100, up over 200. So well over a double there. And let's take a look at, let's talk old boring Visa or MasterCard. Yeah, Visa, you know, that goes up from basically 130 to ran up pretty quick, you know, what's that, 60%, 70% up to September, is kind of sold off since then. The name's kind of really flowing, or the money's really flowing out of these names and into the Squares and the PayPals of the world. So the last one we'll look at is, well, let's look at the dividend. You do still get the dividends with these big names a little bit, you know, less than 1% there on Visa. I think it must be MasterCard that has the bigger dividend. So we'll pull up that chart. And again, a dividend really slows you down. I mean, it slows the stock down. Everybody likes it when you're living off of dividends. But as far as appreciation, you're not going to get a whole much appreciation because you have to keep out paying all this extra money out to your shareholders. So that can be a challenge out there. So you got what, 220 for MasterCard up to 330, and basically sideways to down from September there. Look down here at, again, 0.5% in the dividend. So not a whole lot there, but certainly these are your old payment processors versus your Square and your PayPal out there. So again, iPay, I just saw a couple names pop in the room. So again, iPay is what we're talking about, mobile payment processors. And again, this would be the way to play it, is so you can get the entirety of the space there. Okay. Don't have the Schwab display today because I can't get it to go silent, so ended up killing it off. But when I'm going to put in the chat room here real quick are long and short. Get rid of that. So into the chat, if you weren't on earlier, here goes what we're going to take a look at for long and short today. Again, not a whole lot going on with the, you know, the future's up almost 1%. You would think there would be like 20 to 30 names that are up 5% or more. There's a couple of acquisitions that are up over, you know, like 80%, but nothing really in the heart of our window that we're looking for, except for Mesoblast, which I'll bring up here on the chart. So MESO long. I'm not in love with this. You know, I like this better than our short today. But here's what you've got. You can see it does have the volume. It has about 80,000 in volume right now. So you can see where it is. And again, this is a long play. And Meso is a, get rid of those ads, which are killing me. It's a biotech firm, and they have a new treatment out. And the best I can, it's a skin treatment. The best I can tell is it's for acne. There you go, disregard. It's an advanced chronic heart failure. There was talking something about a skin condition earlier. So disregard. I like this headline better for chronic heart failure. So anyhow, some good news out of their phase 3 trials for this stock. So when you look at it, it's been kind of down in the dumps here at 12. It's jumped a little bit at 16, so it has plenty of room to continue on higher. So, you know, it's back at 18 back in September or so. So lots of room to go higher there. I do like it, but certainly not in love with it. And then when you take a look at the downside, excuse me, that's a short is MISO. I'm saying that backwards. So it's gone up here and it just missed. So it also has room to the downside. So speaking backwards there. So again, that was a miss on their part, failed that trial and continue to go down. So you're looking at maybe a 20 cent, 25 cent stop. So that would give you that maybe, you know, if it can move $1, I think it's got $1 move in it to the downside. So thanks for the correction there. I appreciate that. All right, ATNX. Now we're going to talk acne, since I'm not all confused again. So this is Athenex. It's again healthcare drug manufacturer, and let's take a look down here, make sure I'm not crazy. Here we go. Face and scalp actinic keratosis. So again, this is the positive news about an acne treatment. Is basically what's driving this thing higher. So again, Athenex is been getting a lot of press lately and waiting on this trial. And then when you look at the chart, does this have room to go higher? Yes, it does. It's sold off basically into that. It started to bounce a little bit. So now, you know, it's 12.20 again, 15 to a 20 cent stop would lead to a 50, you know, 45 cent to a 60 cent move higher. Does it have that? Yeah, I think it does. So again, I would like Athenex better than the short. So the long better in the short. So getting a little tongue twisted this morning. Sorry about that confusion. All right. But I do have it drawn up on the chart. So let's share it out. And at least my arrows are correct on the ThinkPipes, which is what you're going to take a look at right now is ThinkPipes. You can only see 3 screens in this display. We've got the SPY on the left. Then we have the Athenex on ATNX sitting there at 13 with the arrow going higher there. So we have the long setup there. And then the short over there in MISO. So when looking at, let's taking a look at the long first, that's the one I think this has a good 45 to 50 cent move. We'll zoom in here a little bit. Again, I don't have quite the, messes up my arrow, quite the drawing skills I normally have available to me. So we'll see what happens at the open. We'll probably wait for a little bit of volume to come rushing in and then taking it long. We'll try to again put our stop below the low of the day. We'll see if we can get a 15 or 20 cent stop. And again, for that to move higher. I do think the market goes higher as the market opens today because of all the optimism running into it. All right, MISO is a little more of a challenge. And again, a little bit of a delayed entry due to the lack of volume. So we have to let that set up a little bit before we go. All right, I'm gonna do one last check on another screen to get my tickers set up. We have 1 minute to the open. Okay, futures holding pretty steady across the board. Get my screens set up. All right. All right, I'm ready to go on another screen. And 30 seconds to open, here we go. Welcome to the On Time On Target play of the day. We have 3 screens in front of you set up. We have 20 seconds to the open. On the left screen is the S&P 500. That's on a 1 minute chart. So we can watch that and we know the futures are trending higher. On the middle screen there, that's ATNX. They have an acne or skin type positive results. So we're expecting them to go higher. They're already gapping up about 5% right now. Here's the opening bell. And then on the right, we have Miso, which had a chronic heart FDA phase 3. They announced the results and they were not as high as expected. So again, that's going to be our short, and you see those arrows in red. So really focusing first on this ATNX because I think the market's going higher. I like this entry point. So 3.42%. That is not as high as we normally like, that 5 to 10. And of course, the Miso's already dropped there a little bit below our 14%. So really focusing on this long here. And I do have some other names we can look at as a backup once this thing gets going. All right. Let's take a look at where this low of the day is. We always try to set the stop below the low of the day. So 1260, a 20-cent stop would be up here at 1280. Okay, that's going to move lower now. Okay, 1 minute in, no trade yet. This is continuing on down. It's almost back to even. So I'm not ready to give up on it yet. Certainly if that goes all the way to even, then we got to give up on it. This one has already moved. So it opened at 14.9. It's already down to 14.5. Ooh, I like that entry point better there. Oh man, I didn't snag it in time. All right, I'm going to give up on ATNX because I don't like the action, but we'll keep an eye on it for now. All right, let's see if we can get this. If this comes back up to 1480, let's take it. I don't really think we're going to see that. We'll take it with a 20-cent stop up to 15. Actually, yeah, just ATNX flip red, so you can forget that. If this comes up to 1470, take it with a 20-cent stop. And again, this is Miso short. We're looking at, I'm just going to draw a little tick mark. We aren't in it there, so, but that's where you want to be. And then 1490, I have to adjust my chart real quick. Okay, and then back and see what we've got. Okay, 1468. Let's just take it here at 1468. If you got in right around that 1460 anything level, you can take it here. We're going to take it short. So I got 1468, and we need to go with a 22-cent stop. So I'm going to crush myself with the math here. 22-cent stop is our stop there. And again, 1468 is the entry point. I'll make this longer so it's obvious what we've got going there. And again, this is short, which is already depicted. So 1468 minus 22 is going to be 46. So this is going to be our 1R point down here at 46. So make sure you have your upper stop in just in case it does flip us out of it. So that'd be your 1R point at 46. 46 minus 22 is 24. So that's going to be your 2R down here at 24. And then our exit point is going to be at 1402, which is again off the chart. So I'm just going to make a little note of that, 1402. And I'll draw that in for you once we have it. So again, Miso short on the failed news of the heart condition. So there it's at 1R. So we'll just kind of let that cook while we switch. Oh, okay. Drop down there already. You could even kill it here if you wanted, since it just dropped. That was a heck of a drop there. Or you can hold. I'm not holding anything past this 1402 point. So you can kill here and take the two. When you see something drop like that, I tend to just kill it. But you, if you're still in it, hold out for 1402. So that was a beautiful, beautiful move down there in our short. All right. And again, when something moves down like this, I have no problem with if you want to take your upper stop and take it all the way back down to your entry point at that 1468, just so you don't lose money in case this thing flips. You can do that too. Of course, you'd be out right there had you done that. So go ahead and, yeah, this thing's, it's flopping. That's interesting. Yeah, if you're in it, I would kill it here. Just kill it right in here. Let's just kill it off, take it, call it a day. So I'm not interested in any, it's flopping around a little too much for me. So we'll call it a 2.2R trade, depending on your exact entry point. If you want to keep a third of it or whatever, thinking it's going to continue to sell off, you can. But man, these are 2R bars right here that this is flopping around. So let's just call it and put it in the books. and call it a win. All right, I'll come back to that here in a second. So pull it up on the side screen if you chose to stay in it. All right, let's take a look at the SPY. All right, there's our 5-day chart. We didn't really talk about this because I didn't use these screens. Again, this was our yesterday open. We had gapped up and then kind of came all the way down during the day, so pretty negative. And then today we'll see where we end up. Made about half of it up in the pre-market. I don't know. Up to sideways is what I think for the overall market there. All right, let's take a look at what's on the move here. We do have Revive Therapeutics, which has been on fire. Another psychedelic, Shroom F, if you will. Laser's been on fire. You know, I've put some folks into that. Camping World Holdings, don't know what's going on there that's driving that higher. Clickstream's up 25% yesterday, on the move higher today as well. BNTX is obviously BioNTech with the vaccine that's out there. Apple's up big today. I don't know if you caught the headline from Apple, and I was surprised we didn't see it on CNBC since I saw like 5 notifications earlier on it. But Apple's going to produce like 30% more iPhones next year than they did this year, which that's pretty amazing. And, you know, if you try to buy this stuff when it rolls out, of course, there's, you know, it's all online now. You don't have to go stand in line there, but yeah, you're not getting it right away. So kind of like the PlayStation, which is like a unicorn, hard to find. You know, Apple's really increasing their supply. So expect that to flow over to profits as well. Kohl's discount retailer, it's kind of been on fire lately. QClean, you know, I like QClean because it's got all of the green energy stuff out there with going into a Democratic administration. That stuff is positioned to excel. All right, let's take a look at the downside and what we have here. These are a couple other psychedelic names. There's like winners and losers in the space today. All of these are penny stocks, as we talked about, 3 days ago. So just realize that's not uncommon for these things to move 10% a day. Palantir selling off. Let's just take a look at that Palantir chart. And should you be worried about Palantir? I say no. When you back this out a little bit, let's go 20-day chart. You know, it was down here at 15, went all the way up, touched 33. It came back, you know, 2230 was my buy point, is what I kind of said, folks. I'm sorry, 2250 was when folks were saying, should I add more? It's like, yeah, 2250. So we did a pretty good job of capturing that. So we're up if you added there. That's still kind of fine in itself. It'll have negative news cycles quite a bit because a lot of it is behind the green door, super secret stuff. So you don't have like complete visibility into what's going on. But they did get an FDA contract, which you have to think if they're switching from defense into the healthcare into contracts, holy cow. I mean, I just can see the dollar bills raining from the sky right now, and they're not ones or hundreds because, I mean, how much data is there in the healthcare space, right? And if they're going to sort through it and make decisionable stuff, I just think it's a great long-term hold. So, all right, that is it for, let's look at these are a couple of call options for Apple and Blackstone at the top there. All right, let's check our trade real quick and see if it ever did. It did it. Yep, it did hit that lower stop. So there's me being impatient. So why would I do that? Because I don't think in 4 months you've seen me just say, kill it kind of trade. It's this bar. When you see this move down, so if you're trading for real money or even paper money, your screen, how you should have it set up is your open positions, right? Which is blank. And then all of a sudden, boom, when you take a position short or long, you have that screen pop up. And what you're looking off at, generally people have it set up at the far right column is your P&L. And it's called a P&L explosion to a trader. So when you are looking at it, and you see that you're up, like, say you're doing a $350 R and you're up half an R, so it's showing plus 175, and then all of a sudden, boom, it goes to 800. That's kind of a too far too fast type move. So that's why if you're actively trading, you don't need to set the limits. I tell you to set the limits every day because it's good discipline for you. But if you have your finger on the button and you're going to sit there with your finger on the button, you can just have a market order. And then as soon as you see it, you just click and you're out. And the downside of doing that is if you click here and it goes to this minute and then all of a sudden shoots higher, I mean, that's kind of a crazy exit. You could end up like Well, I was up 800 bucks and then I only made like 100 because I got filled here. So when you see something move like that, that's just kind of that. It's P&L explosion. There's nothing, no other way to explain it. Obviously, if it happens to the downside, that's a gasping moment. And if you trade, you're going to see it both up and down. So just be ready for it. Okay. So nice trade, a little bit non-standard there today for MISO short. All right, I need to, before we share out, move my screen out of here. Let's go with right there. Okay, here we go. All right, last thing I want to talk about is yield on cost. So there's confusion on this, and this is a basic concept, but it's worth talking about. So when a stock pays a dividend, say it's $100 stock and it pays $1 dividend. Okay, so easy, super easy math. That's 1% yield. Now, think about, of course, you want to buy good stocks. You don't buy crappy stocks. So you buy a good stock and it goes up. So that $100 stock, say it goes up to $105. High fives for everybody. That's a 5% in capital appreciation where everybody's happy. We're all making money. And then it goes to pay out that dividend. And some people think, well, they're going to get 1% of that, which would now be $1.05. And it's like, oh, no, you are not. You are going to get the dividend payout, which is $1. Now, it's actually yielding less because the stock went up. So when the stock's at 105 and it yields and it pays a dividend of $1, your yield, and I'm not going to do the math, but is going to be ish 0.95%. And when that happens, people who live off of their portfolio can think that they're getting less money because their portfolio is yielding less. And it's like, no, that's not the case. A dividend is a dividend is a dividend. It's set by the board of directors and it's pretty much in stone. I hear some chuckles through the internet right now because yes, there were dividends that got cut back, barring pandemics. Or companies going bankrupt. The dividend is something you can pretty well literally take to the bank. If you still want checks in the mail, you can get those. I don't know why they're still doing that, but most people don't. Most people take it as a electronic deposit and either leave it in cash or reinvest it into the stock that you got it from. So that's the basic of the dividend and yield. So the dividend stays the same unless it's moved by the board, which happens on or around earnings. And the yield fluctuates every day based on the stock price movement, which moves every day. Okay, so those are basic concepts. Now, what is this yield on cost? There are all kinds of people that will market to you and say that my portfolio pays me 50% in dividends. And it's just like, what? Obviously, something can't pay 50% in dividend because you'd be paying out half the company every year, right? Obviously, nobody stays in business if you're paying a 50% dividend. So what is this BS nonsense that they're throwing out in marketing? It's called yield on cost. So as a basic example, you can read the words if you want, but it's really when you look at, if you bought a stock for $1 and say you go back 20 years, or you're one of the younger folks in here, and by the way, good luck on finals this week. I'm glad a couple of you are still showing up during finals week. That's not expected, but I like it. If you buy a stock for $1 and hold it for say 20 years and that stock goes to $20, you're like, okay, fantastic. And the stock of the company has grown so much, it's grown 20-fold, 20x, the size now. Now they pay a nice juicy dividend of 5%. Well, that is $1. So they're paying $1 dividend on their $20 share price. Well, if you bought it at $1, your cost is $1. So you could literally be making $1 dividend for a stock that cost you $1. And somebody would say that that's 100% yield on cost. And mathematically, I guess they are accurate, but it's nonsense, right? You're making 5% on your money because your money's gone up 20 times. This is what people use to market when you say we have 99.9% winners in the portfolio, where they're using nonsense metrics like this to be able to sell you that. So we all know that if you buy a stock and you hold it long enough, the dividends will eventually pay for that stock, right? Because you just got to hold it for a while. If it pays 1%, you got to hold it for 100 years. If it pays 5%, like ExxonMobil used to, or any of the bigger dividend payers, you got to hold it for 20 years and you've paid for it. And so, I mean, I like a lot of the math, but don't be pulled into these folks saying we have portfolios that yield 20 and 30%, because they don't. They yield what the market yields. It's just they got a good entry point and they've held for a long time. All right, let's see. So yield on cost should not be confused with current dividend yield. So that's kind of what I just talked about with probably far too much math this early in the morning. But current dividend yield you care about. When I show you FinViz, here, just look real quick at FinViz. There's 1,000 metrics. Do you see yield on cost? No, because it's irrelevant and it's all based on your own price point. So I don't know if it's not in the top 70 metrics that FinViz chooses, and you don't really need to pay attention to it. So, okay, so largely a marketing number, if you will, is how I will wrap up there. All right, I do want to check back real quick on that trade, just kind of more curious than anything else. To see how it's acting since it was flopping around so much. So yeah, it's kind of dialed in the exit point there, down 17% for the day. So, all right, nice trade. All right, that's what I've got for you today. Thanks so much for checking in. Sorry, I got a little tongue twisted there on my longs and shorts. That does not normally happen. We'll make sure it doesn't happen again. With that, we'll see you guys back tomorrow. Bye.